If your investment strategy is to buy houses in an area where you're looking at a capital appreciation or a growth in value, the things that you're going to have to be looking out for is essentially very, very similar to a flipping area, where you're looking for an area where there's a very good demand for people to live within this area. You're typically going to be hoping for good schools, but the real numbers and the fundamentals of what you're going to look for is primarily around the value changes or the price changes within these given areas. Now, the easiest way for you to be able to do that, other than just taking a look on your sold comparables, which is not a terrible way in which you could do it, taking a look at sold comparables and trying to, and this is all done through Rightmove sold houses, and trying to list it all by date, and then taking a look at the value changes over a period of time. You can also review things like the housing price index, which will also give you an indicator in terms of where it's going. Now, these are all giving you an indicator in terms of the trajectory of the market, but they don't give you a predictor in terms of where the market is going. Okay, so other than things like making sure it's a nicer area, quite built up, around good schools, all of this stuff, you're going to want to be checking in terms of what is the likelihood of this market continuing to grow in value. So things like the sale times, how long are properties taking to sell? So if the sale times is reducing through time, okay, so essentially take a look online, see if properties are selling within 2-3 months as an average. This then is a really good indicator that the demand is still very strong, and therefore the value of the properties will continue to go up. Also be looking for things like what we call gazumping, okay, which is where people will then buy a house after it's been agreed by somebody else. Very unfair, not good business practice, but unfortunately it happens quite a lot in very high demand areas. You can also speak to estate agent and ask them what areas are absolutely booming right now, or do you believe are the next up and coming booming areas that seem to be starting to move in the right direction. Estate agents will be able to give you a really good indicator in terms of, well, if you want appreciation, this is a really good little spot here. The final thing and the most important thing to understand is, are the values currently on the market achievable? Okay, so when a property is listed for a certain price, is it listed hugely above the actual value of the house? Because if that is the case, then that's an indicator that basically the estate agents are aggressively trying to force that market to grow. But typically what they end up doing is they tend to stunt that market. So what you tend to find as a trend across the entire of the UK is you'll find that the market is very cyclical. So it'll have your downs and your ups and your downs and your ups and so on. Now, what ends up happening is as the market is going down, it's typically because the price or the area has become unaffordable for the people who want to live there. So either they end up selling or you have recessions or anything like that, but this tends to have an effect or a negative effect on the values. And then the market tends to have a few years of bottoming out, where the values don't tend to change very much for a period of time. Okay, now this is actually a really good time to be buying into the buy-to-let market. And once this period is gone, you'll notice that there's a transition of the amount of demand and therefore the sale time of houses in that area from being a long sale time to being a shorter and shorter sale time, where you'll see it turn the curve at the bottom. And as the property market then starts to go up, you'll notice a much greater demand. So basically houses flying off the shelves, there's a lot of dirty practices, estate agents become very arrogant. This is a really big signifier that the area is booming. They get very cocky, and you'll tend to notice that the market in that area, or the house price in that area, starts to go up really well. Now, as soon as you start to notice that you're getting calls from estate agents, this is typically because what they're doing is they're struggling to find buyers. Okay, and they'll be saying, oh, it's getting harder to find buyers, oh, it's getting more difficult, or people are failing on mortgages and things like this. Now, this is typically an indicator that you've reached the top of the market. And once you start to reach that point, especially when estate agents start calling you, offering you to go out and look at houses, you know that that market has gone beyond its peak, and inevitably it is due to go down again. So estate agents tend to be a good market, but the most important thing is sale times, because at this point, as you start to hit the top, you'll notice that the sale times start to expand and properties lay on the market for longer and longer and longer. And they will eventually get to a point where the properties are no longer affordable for people to buy, and eventually that market will then round the turn and then go down again. Now, you'll have noticed this many times across the entire industry back in the 80s, 2007, 2008. So you notice this across the board, and this is how it happens cyclically around the entire country. Now, the interesting thing is it doesn't happen around the entire country at the same time. Fortunately, it sort of radiates out from your center point, which is London, and then it will radiate out around the entire country. And it's kind of like a wave, so it's a ripple. And if you think a wave has its up and down, and exactly the same way, it ripples its effect all the way up the country, where essentially all of the down value properties then start to go up, and then all of the up, once it hits the top, will start to go down, and it will radiate out from the center of London all the way out throughout the entire nation. The real art of what we do is just making sure you keep in touch with the data. So for our mentorship students and our coaching clients, we actually send out what we call the market report. And that market report gives you a really good indicator in terms of the data of what's going on across the entire country at any given time. And you can also then monitor the trends to be able to see what areas are growing, what areas are shrinking, sale times, valuations, rental values, so on and so forth, to better be able to make a decision whether you want to invest in that area or not, based on the strategy of capital appreciation.